Investing in property in Malaysia in 2024 depends on several factors, including the economic climate, property market trends, government policies, and your personal financial goals. Here's a breakdown of what could influence property investment in Malaysia in 2024. 1. Current property market trends between 2023 and 2024. Property prices. As of late 2023, the Malaysian property market was stabilizing after facing a soft patch during the COVID-19 pandemic. While prices have generally stagnated or slightly declined in recent years, there is potential for growth in certain regions. However, the oversupply of properties in some areas, example high-rise condos, may keep prices subdued in 2024. Supply and demand. The supply of unsold residential properties remains high, which could keep property prices from rising rapidly. This may present opportunities for buyers looking to negotiate better deals. Rental market. Rental yields have been low in recent years due to oversupply and weak demand in certain locations. However, a growing trend of urban migration and economic recovery might support a rebound in rental demand, particularly in major urban areas like Kuala Lumpur and Penang. Number 2. Economic outlook. Economic growth. Malaysia's economy is expected to continue recovering after the disruptions caused by the pandemic. The Malaysian government has introduced measures to stimulate economic growth, which could positively impact the property market. Inflation and interest rates. Malaysia has experienced moderate inflation, which can affect the affordability of properties. The overnight policy rate, OPR, is a key factor as it influences mortgage rates. If interest rates rise, borrowing costs will increase, making it more expensive to finance property purchases. However, if rates remain stable, it may create favorable conditions for property investment. 3. Government policies and incentives. Home Ownership Campaign, HOC. The Malaysian government has extended incentives to encourage home ownership, such as the Home Ownership Campaign, HOC, which offers stamp duty exemptions and other financial benefits for property buyers. The HOC may continue or evolve in 2024, making it a good time for first-time homebuyers. Foreign property ownership. Malaysia remains attractive for foreign investors, particularly under the Malaysia My Second Home (MM2H) program, though there have been changes to eligibility criteria in recent years. Foreigners generally can buy properties worth $1 million and above, depending on the state. 4. Location-specific considerations. Kuala Lumpur and Klang Valley. This area is often a focus for property investment due to its centrality and ongoing infrastructure projects, e.g. MRT expansions. Properties near transport hubs tend to retain value and have potential for capital appreciation. Penang and Johor. These regions are also attractive for investment, especially with developments in the Penang Transport Master Plan and Johor's proximity to Singapore, which may see spillover effects from Singaporean buyers and investors. Iskandar, Malaysia. Johor's Iskandar region has had mixed results, with an oversupply of condos. However, infrastructure improvements and Singapore's proximity could make certain developments attractive in the future. Number 5. Is it the right time for you? For first-time homebuyers, if you're planning to buy a home to live in, it might be a good time, especially with government incentives and relatively affordable prices in some areas. For investors, timing is key for investors. While the market may present some bargains due to the current supply situation, there's a need to be cautious about oversupply and potential risks in rental yields. Conduct thorough research on location, project quality, and long-term prospects. Conclusion: 2024 could be a good time to invest or buy property in Malaysia, especially for first-time homebuyers or investors with a long-term perspective. The property market appears to be stabilizing, and with government incentives and recovering economic conditions, there may be opportunities for both capital appreciation and favorable financing conditions. However, investors should be cautious of oversupply in certain regions and keep an eye on interest rates and economic policies. A location-specific, well-researched approach will be crucial in determining whether it's the right time for you to invest in property.